While inflation continues to be a challenge for all Canadians, it's those that aren't making as much money in the lower to middle classes that are hurting the most. One of the ways that the government has thought to get around this problem is to put checks into those people who don't make as much money. We've seen movements from the federal and provincial governments, and we're going to be breaking down that is this the potential solution for the long run cause of inflation, or will it actually make it worse? So we're going to be going through a little bit about what Tiff Macklem said in his speech this week in relation to what Newfoundland has done. We'll also talk a little bit about what's happening in the US and what Trudeau did a month ago. But if this is your first time here, my name's Nick. Welcome to Ways to Wealth. Before we get into the video, huge favor, huge ask. If you learn something new or you get some value out of the video, hit that like button for me. I definitely appreciate that. And if you haven't already, please consider hitting that subscribe button and turning that notification bell on. If you like content like this, we put it out every single Sunday. So stop by the channel and come check us out. As mentioned, we are going to start by looking at what the federal government has done to help those in the lower classes. And we saw Trudeau announce about a month ago a $4.5 billion inflation relief package for those low earners. Now, if you didn't see what happened, you could probably research the extent of what the package included. But basically what I want to draw out is that, there's going to be a $500 one-time payment for all of those who fit into the criteria. There's also some benefits with dental. So we have the federal government moving to print money essentially so that those in the lower class can help curb inflation. Moving on, we have the Newfoundland coming out, and they actually moved, I think, earlier this week to do a similar $500 one-time payment to those who made less than $100,000. They also are giving between $250 to $500 for those in the 100 to 125 bracket as a family. Now, as a whole, what I'd like to point out is that this program will cost the provincial government nearly $200 million. So here are two programs here, and probably more to come just in Canada alone, that are printing out more money. And almost some economists and other, educated people have said this is why we're in the particular circumstance that we're in today, is because we've been printing money. So I know that a lot of families are hurting. I know that, these checks will go to use, but what percentage are going to go to those retail goods and create that retail demand that kind of put us in this place in the first place? So let's take a look at what helicopter money is. If you're not familiar with what helicopter money is, essentially what you're doing is you're printing money and you're putting it directly into the hands. Previously, when we've gone through the 0809 crisis, when the governments printed money, they gave those investments or those opportunities to buy those bonds to large corporations, to other governments, etc., into the hands of the wealthy. So those wealthy people were getting all of these investments at a super low investment rate in hopes that they would create more jobs. Now, what most people realize is that the money stayed with the wealthy and it didn't spread throughout the economy, as well as what helicopter money could do, where you physically put checks into everybody's hands, but more importantly, on the lower income side. So we see here, generally, helicopter money boosts spending and economic growth more effectively than quantitative easing because it increases aggregate demand. The demand for goods and services immediately. So these people can turn those checks into, whether it's paying bills, but they could also buy clothes, food, etc. So there is some cons of helicopter money. So unlike quantitative easing, using helicopter money as a tactic is not reversible. And many argue that it's not a feasible solution to revive the economy. A country's central bank sets its interest rates to reach economic growth targets. However, a helicopter drop means that a central bank cannot use interest rates to recover any costs. It's because the money is not linked to a borrowed asset. Instead, the money is given directly to the public. This may lead to overinflation and cause further damage to the central bank's financials. One of the main risks associated with helicopter money is that it could lead to a significant devaluation of the currency on the foreign exchange market. Now, the last part is not so circumstantial to this video, but obviously as a foreign currency is more readily available, the value goes down. So when we talk about this overinflation and aggregate demand, it's almost exactly what Tiff and the central bank is trying to avoid. We're trying to cut demand out of the equation today because that's kind of led us to the situation that we're at right now. So let's take a look and listen as to what Tiff said when he was questioned this week about what Newfoundland is doing.
Newfoundland yesterday announced a $200 million spend to help consumers recover from the impacts of increased costs, which will give $500 to every family who earns under $100,000. So I guess I'm wondering, are governments helping you fight inflation, or are they not helping you fight inflation?
Well, let me say a couple of things here. First of all, I have a big enough job with monetary policy. I will leave fiscal policy to our ministers of finance across the country and ultimately parliaments across the country. I will say that I think the advice that the IMF has put out is good advice for everybody around the world. And their advice, look, we are acutely aware that inflation is creating hardship for Canadians, and it's particularly creating hardship for the most vulnerable Canadians, low-income Canadians, people on fixed incomes. And the reason it's particularly acute, obviously, they have fewer buffers. But the other factor is some of the biggest price increases have been in essential goods, energy prices, rent, food. These are not things you can do without. So there is real hardship, and governments are quite sensibly looking at how do you insulate your most vulnerable from that. The advice from the IMF, which I think is good advice, is make sure that those measures are targeted on the most vulnerable, and make sure that they're temporary because, as I've said several times already, this inflation is not here to stay. It's coming down. The best way to protect Canadians from high inflation is to eliminate it.
I'm not sure if you guys noticed this, but when Tiff is first asked a question, he gives a little bit of a sheepish smile, almost saying, this is kind of how we got here today, but he goes on to politically answer the question. He knows that there are people that need the money, and then he goes on to say that we need to make sure it is targeted, and we need to make sure that it is not consistent. Because if those two things happen in terms of consistency and the money getting into the hands of everybody, this problem will continue to persist. So that is definitely where we're at today in terms of on the Canadian perspective. Just to touch on the US, Gavin Newsom came out and said that 23 million Californians are getting $1,000. I'm not sure entirely how that program works, but we're going to potentially see more governments start to do this. And this could be a problem moving forward, especially how this printing money scenario is kind of how we got here today. So we have to watch moving forward to see if these governments continue to do this. Will it continue to make inflation sticky and only prolonging the progress that we're making to help curb inflation? So let me know what your thoughts are below. Obviously, I completely understand that everybody needs money and needs help to get through these times. But if we continue to do it, do you see the same problem that I have where inflation continues to persist? You're basically creating demand. But yeah, let me know your thoughts. This is something that I pinpointed out of Tiff's speech this week. I hope you all have a great week in the markets. Happy trading.